all of this stuff going on in the market, which could be characterized by a hater or a skeptic as manipulation. Wall Street is just one of the actors, but if they do stupid stuff, if they like manipulate, it's capitalist trading with an agenda that's different than yours or mine, because they're going to short it at the top, they're going to cover their short at the bottom. Bitcoin could go down 95% tomorrow and stay there for 5 years.
In this market analysis, we bring you a major update from Michael Saylor, who shares his latest insights on the current correction in the Bitcoin market. In a recent interview, he discusses the reasons behind this significant dip and explains why it's occurring. He also talks about what we might expect in the near future. Let's dive in and hear what he has to say.
When the price moves in random directions and when it moves in the opposite direction of the way that it ought to naturally move, I think there's someone with a lot of capital that's either panicked and they're doing something that I deem to be stupid or foolish, or I think there's someone with a lot of capital that has a different agenda than the rest of us and we don't understand it, and that creates volatility. I don't think it's just Wall Street. I mean, the truth is Bitcoin's just a free market. It's the freest market in capital in the world. And the definition of free market is anybody can manipulate it any way they want until they run out of money. If you have $100 billion of Bitcoin and on Saturday night you want to sell all $100 billion of Bitcoin all the way down to 1 penny, maybe you can do it. And maybe you have an agenda to do it. I'll probably be buying it when it gets down to the 1 penny, maybe when it gets to the $1. I mean, if you want to call it manipulation, you can, but I wouldn't refer it to manipulation as much as enable. It's enabling you to do it, right? Bitcoin's volatile. It's always going to be more volatile than the S&P. The S&P's vol 15 and Bitcoin's vol 60. It's always more volatile, but the reason it's more volatile is because if you had $1 billion and you just had a panic attack, and if you wanted to take a $10 billion or a $100 billion short position on the economy, the only way you could do it was Bitcoin. But Bitcoin would give you not just the ability to short the market, it would give you the ability to short the market in 1 minute. It would give you the ability to short the market with 100x leverage or 50x leverage or 20x leverage. Okay? The truth is on Wall Street, normally you can't even short more than 2x. Like, it's very difficult for people to get extreme leverage. I guess in the CME market, they get a bit more leverage in the future, so there they can bring more leverage. But, I mean, Bitcoin is really providing everybody in the world with the greatest degree of liquidity and leverage and credit. And maybe you're a fool to short it, but maybe you're a fool to go long the other way. But the point is, that's what makes markets. Everybody's got their opinion, and you might think that you know better, but if somebody wants to panic sell $1 billion of Bitcoin on Saturday night because they heard that missiles got launched because they saw it on X, your position is either you're not allowed to do it, I'm going to censor the transaction because you're just not allowed, and I'm the God King of capital markets. If you're stupid enough to sell $1 billion based on a troll account because you saw a meme and there was no missile strike, or maybe there was, but it didn't matter, you're just going to lose the money. You won't have the money. Bitcoin could go down 95% tomorrow and stay there for 5 years. You're still getting paid. Some people hate volatility, right? The mainstream normies, they hate it.
Yeah.
But if you go to Susquehanna and you said, we're going to strip the volatility from MicroStrategy, we wouldn't have $100 billion, $95 billion open interest. There's a big market, a $300 trillion market for fixed income, coupon generating, principal protected, low volatility instruments. There's another massive market, $100 trillion market for equity like S&P, SPY, Vanguard 500, QQQ, that kind of, something that gives you 15, just beat the S&P performance. And if you do it with less vol or less risk, then why don't I just give you trillions of that? So there's that market. Then there's the Bitcoin market, which is, I want Bitcoin upside at MicroStrategy. And then there's the convertible arbitragers, right? And the convertible arbitragers, they're like, I'm going to buy 50 million of your paper. I'm going to short 40 million or 35 million of your stock. And then as the stock moves around, I'm going to adjust the short.
Right.
And I'm extracting that premium risk-free. And that's their thing. And that's what they do. When I meet with them, by the way, I'm like, I see you guys every, few weeks or every quarter. Nice to see you again. By the way, that thing that you shorted tripled. Like my advice, what I say to them, this is like 75% Bitcoin upside. Actually, it's like 70% MicroStrategy upside. It's 100% Bitcoin upside. It's like, you're already hedged. You're already 10x over collateralized. Why are you hedging it again? But there are some people that do they double hedge it. So there's a group of people that buy that convert, and they just buy the convert. They're already hedged, and they outperform Bitcoin without the risk. There's other people that, by the way, that's one type of view. There are other people, they don't want to take the risk for an hour. Literally, the afternoon they're buying the bond. When the stock's moving around, they're buying 50 million, shorting 40 million minute by minute. They don't even want to take an afternoon of risk.
Right.
Most people don't have the math, but if you're a quant, right, model the value of selling a fixed income instrument where what I gave you was a guaranteed coupon and I gave you over collateralization and principal security. But in return, I took the float, I took the vol up front. I'm getting $1 billion from you, and it's going to trade with a 60 vol. Right? Anybody, it's like $1 billion flywheel spending 60 RPM. There's energy in it, right?
Yeah.